So you want to take trades like this, high probability setups with monster risk rewards. I'm going to show you in this video how you can also do it. And we're going to go over through the VIP trades sent on the last month. Okay, so first off, I want to tell you that this trade was sent in the VIP group, so you get an idea. This was the previous, okay? It was a before and the after, okay? Now let's go to the chart. Okay, so first off, guys, this is the 4-hour chart, and what you want to do is identify like the trend, right? So as you can see, by the way, this is the GBPJPY, okay? As you can see, we are in a downtrend, right? What you want to do is when you find a setup, you want to see the extremes, right? Which is this is the high, okay? The high is high, and this is the low. So as you can see, the price reached the lowest low. Here it took some liquidity out. So let me show you. So once you've identified the high and the lowest extremes, now you want to see and find the setups. Okay, guys? So let me take this off. It was a 1 to 44 risk reward ratio, but I want to show you how I found it. As you can see, we have like plenty of supply zones in these areas, and we're making this continuation to the downside. Okay, so as you know, guys, I only take trades based on the best active sessions, which are London and New York session. Okay, so if we go to the 30-minute time point, we can see in here we had a change of character. Okay, so what does that mean? It means that here we had a trend going up, right? A bullish trend. This leg was the last leg of making the highest high, or actually it made an equal highs almost, right? And here, as you can see, guys, it made a new low, okay? Breaking this point over here. So that was the change of character. So if we go and we mark up our sessions, okay, in here, this is like a day, this is another day. So it was identified from the previous day and then at the New York session. And as you can see in here, we were creating this liquidity. I'm going to take this off. Here we have some liquidity. What does that mean? It means that whenever you see these wicks and we have equal highs or even like a price trending up or down, we know for a fact that above or below, we're going to have orders from traders who think that price is going to break out either way, right? Or traders who think that price is going to drop from here. So we have a lot of orders accumulated, which is going to give the liquidity for price to push either up or down, right? Depending like where's the liquidity. So as you can see, guys, I identified the supply zone at the 30 minutes, okay? So I'm going to show you two ways in which you could have taken this trade. The risky one was just placing a pending order right at the zone, right? And your stops above, okay? And your first take profit could have been at the low, either here or at this low over here, okay? Which could have given you a pretty good risk reward ratio of 1 to 7. That was a little bit risky. Why? Because we didn't know for a fact if price was gonna wake up, right? If it was gonna do some manipulation and then if it was gonna drop. So let's go to the second way in which we could have taken this trade with less risk. The second method and the best would be refining your zone, okay? Which means we're gonna make it smaller, our zone, and we can take a trade based on the lower time frames, okay guys? So what you wanna do is go to the 5-minute time frame and we're gonna identify a change of character, which means, as I told you before, we had this price going up, right? And then here, price broke this structure over here, okay? As you can see, it was a new low. So now I'm gonna draw it right here. We had our change of character. And then you want to identify your new supply zone, which is this one right here, okay? So you wanted to wait for price to reach that level, and then you can execute and place your sell and your stops right above it. Okay, so now as you can see, previously we had a 10 pip stop loss. Our first entry was as soon as price entered the zone, and the stops were kept above, right? Which was like that. So now it was a 1 to 7, I think, right? So now, as you can see, guys, look how much did we improve our entry.
Nice.
Let's say we took profit. The other one was 1 to 7, right? Obviously, you can leave runners, and that's why it reached a 1 to 44, guys. Okay, but this could have been your first take profit. I'm gonna mark it up in here. These lows could have been your first take profit. So now you can see the difference, right, guys? The first one was just taking the trade based on price reaching the zone, right? The supply zone. And the second one was at the 5 minutes waiting for change of character, refining your entry, finding the new fresh supply zone and waiting for price to tap into it. And I'll recommend you guys to leave some space just in case price decides to wake up. You're not going to get stopped out and you don't want to miss an amazing opportunity sale. So if we go to the 4-hour and we identify the lowest low, which was this, right? Remember at the beginning of the video that I said identify the extremes. Okay, and here we have the demand zone, and we zoom in. Here we have our trade, and the trade taken on the 5-minute, the refined entry could have given you a 96 risk reward ratio. So basically, you could have like have a 100% on your account. If you risk a 1%, you could have made 96%. Okay, but personally, I don't let them run like too long for that long. I usually just I take the low of the ranges. That's just like a personal preference for me. But if you're one of those traders in which you close a portion and you can leave the rest of your trade running, then that's amazing. You will catch like really, really amazing trades, just like this one. Okay, guys? So in summary, basically here you can see, right, both of the trades taken. The first one giving you a 1 to 44 risk reward ratio. It was just basically taking the entry pending order at the zone, and the other one was at the 5-minute refined entry, guys. So now let's go. I'm gonna show you how the trades that we took at the group at the VIP. Okay, guys. Okay, so in this trade, I was explaining how we had this clean traffic and price was going to go to that supply zone, which was around 28 pips. So that was a winner. As you can see, it did happen. Here we have another trade. Here we have another trade. This is the before and the after, right? This is another trade. This one was a euro. And again, right, another win. This is the trade we explained. The before was developing and the after, right? Another one, another winner, another win, the before and after, another, the before and after, another, and this was the last trade. at gold, the before and after, which case we had a really high winning rate this month, and basically we just had a small loss of like -3 pips, and all of the trades that were sent, there were at least 1 or 2 risk reward ratio, at least. Especially if you leave runners, like you can achieve like 1 to 3, 4, 5, even 10, 20 risk reward ratio. So it's pretty good. And at the same time, I send the markup charts so you can learn at the same time, guys. So that's it for this video. Let me know in the comments what you think. If you have any more questions, or if another video you would like me to make for you guys. And don't forget to subscribe and click the like button. And I'll see you until the next video. Take care. Bye.